and understand what the interim budget really meant for the tourism sector, and who better than Puneet Chhatwal from IHCL joining in, and I'm going to take it across to Nikunj for that chat.
Change of leadership, and when there is a clear focus on profitability and growth driven with purpose, and in this case it's customer satisfaction, stock markets, they tend to reward those businesses. Indian Hotel, that in last 10 years has given you following return. Last 10 years, let's look at that chart. It'll just come up on your screen to establish that what Indian Hotel as a franchise has done in last 10 years. That is followed by a 5-year chart of Indian Hotels. But when I say magic, the real magic actually in the stock of Indian Hotel has happened in last 3 years. Why is the magic? Well, the sector has turned around, business has turned around, and now in terms of the expansion and the forward strategy, Indian Hotel is firing all cylinders. So it gives me great pleasure as always to connect with Mr. Puneet Chhatwal, Managing Director and CEO of Indian Hotels, to take our conversation forward. Mr. Chhatwal, did you like our story of a magical term comeback in a stock 3 years? Before you could finish the word magic, the magic has happened for shareholders.
Well, we are very pleased with the performance, Nikunj. It's always nice to talk to you, and I think the guidance we have been giving on a consistent basis, we have been able to make that promise and also deliver on the promise. And our strategy will remain the same, to be in line with the guidance we give and preferably overachieve that in a little lesser period than that we have guided for.
The quarter gone by is always the peak quarter for IHCL. How was last Q3 different from Q3 of FY23?
Actually, the Q3 in all metrics was obviously positive, but what triggered that positivity is obviously 3 key initiatives that we have undertaken consistently. One is our not like-for-like growth. We opened 16 hotels last year. So as the hotels keep opening, I mean, last year means in the last 9 months, and we are well poised to do 20 openings by 31st of March. Going forward, next year will be another 2 hotels a month. So all these hotels on a management fee-driven business model are adding to the margin expansion that we are witnessing. Our management fee business has more than doubled in the last 3 to 4 years. So we expect that the total management fee income at the end of this financial year should be around 450 crores. Now, this was less than 223 years ago. So that's one, is your not like-for-like growth. The second important part is effective asset management. We have invested 2,500 crores in the last 5 years in upgrading our assets, in upgrading brands to Taj level. 24 of our hotels migrated to Taj, which includes the Fort Aguada and the Holiday Village in Goa, or the Fisherman's Cove in Mahabalipuram. And all these have also contributed significantly in the upgradation of not just the brand, but in the financials. And finally, we continue our focus on the new businesses and the reimagined businesses. New is our Homestay, our Qmin, and the reimagined Ginger, the reimagined Chambers is also, and the reimagined Taj. That has witnessed a 34% growth over last year. And we have given the statement that we expect these businesses to keep growing at 30%. Our traditional business will also grow, that IHCL at 15 to 17%, but the new businesses coming from a smaller base will grow very fast and become a significant part of our portfolio.
Mr. Chhatwal, your stated objective is of a double-digit growth for FY25. But if you have to look beyond FY25, FY25 will start in 8 weeks from now. But if one has to look at FY26 and 27, what is the probability and the possibility that the double-digit growth will actually be there for at least next 3 years?
Growth comes from your existing business. Growth also comes from your new businesses as well as new openings. Now, we are well positioned to open a minimum of 2 hotels per month going forward. So, not like for like growth with a pipeline of 85 hotels, which means we would have opened most of these hotels in the next 3.5 years. This does not include any conversion opportunities. This does not include any other inorganic growth opportunities. So, with all that put together, I remain confident that our double-digit growth will continue.
Can I assume that 35% will be the new normal for Indian hotels for the foreseeable future, 35% margin?
Well, the guidance we have given is 33, and we do believe that 33 is a very healthy number. If we can get more, why not? If we can, like in this quarter, we got 38.5, we go for 38.5, but a little above 33 is what we are targeting, so that if there was any kind of a downturn coming, if you're positioned at that level and you reduce your margin by even half, you still stay in black and you continue to have profitable growth and a profitable journey.
The hallmark for Indian hotels has been that you are building up the management fee bucket, and that is the real reason why margins are also expanding. So, at what rate is the management fee income likely to grow?
Well, we expect the increase in management fee income, anything which is north of 20% per annum. And we have given that guidance also that by 25-26 end, we should be around 550 crores in management fee, which means an increase of over 100 versus the number we are expecting at the end of this financial year. And the flow through of management fee business is very high, as you know, it's anything north of 60%. And with our pipeline being 74% in fee-based business, and a lot of operating leases for Ginger, because we don't believe management fee business is the right way for Ginger to operate. Ginger brand has the capacity to do more than 50% margin. So we prefer the operating lease model. And our owned assets is very few. We have just 2 islands in Lakshadweep, 1 hotel in Cochin airport, which is opening, and 2 in Ekta Nagar that are also under construction. So in the next 5 years, these are the 5 owned assets that we know today, which we will be opening. And the others will come selective investments in strategic locations, and part of the nation building also that we do, that will keep happening. And we think we have good amount of gross cash reserve of already at 1,800 crores. We have enough internal accrual to do so and don't need to take on any debt.
Mr. Chhatwal, 2-3 years ago, to talk about religious tourism, that was more like an idea and that was more like a concept. Now it's true. The fact that you've signed up a hotel in Ayodhya and we spoke about it. Are you also factoring in an upswing coming in from religious tourism as we look into the future? Because this is something which now adds a new dimension to your portfolio positioning.
You know, I actually am a firm believer that if we don't take into account the first decade of this century, I think spirituality across the globe in all parts of the world is gaining in importance, including in leadership styles. I mean, you know, in some place in your mind, to be a holistic leader, you cannot be just driven by profitability without, as you said at the outset of the conversation, purpose. And purpose has some link to some form of spirituality. Now, we are very blessed because for several decades, our company has been building spiritual destinations. And we are present in more than 50 of those with 60 properties. And we will keep adding. And the good thing about it is, unless there was a lockdown like COVID, these destinations have always done very well for us. So right from the north, let's say from Katra, from Vaishno Devi to absolute down in south with Meenakshi Temple in Madurai, or you know, the Tirupati, we are opening our second hotel this month in Tirupati, and Ayodhya with 3 hotels planned. So I think we are very, very well positioned. And the Ganga belt, the way we cover from Rishikesh with the Taj and Anand Kashi on the Ganges, then Pilibhit House in Haridwar to Taj Ganges and Taj Nadesa Palace in Banaras, and the new opening that we have planned in Patna later this year is also, very symbolic of our Ganga trail, that the way we have built it systematically. And Patna would benefit both from being the capital city of Bihar, but also being on the Ganges.
Mr. Chhatwal, specifically you just mentioned to the new businesses. And in terms of the new businesses, because the base is different, they are growing at about 35%. But as we look into the future, how much percentage of your revenue in FY25 and beyond will come from these new businesses, the new growth frontiers which you've incubated? I'll just, break this question for the benefit of our viewers, Mr. Chhatwal. Allow me to just explain this point. We are talking about Amma Trails. I used to always call it Amma Trails, but Mr. Chhatwal has corrected me over the years to call it Amma Trails. Chambers, Qmin, by the way, there was lovely, hospitality which we enjoyed yesterday from Qmin, and that Chai Pe Charcha Qmin show which comes out. So after this plug for ET Now, sir, let's talk about the new businesses.
So new businesses and the newly reimagined. So Chambers is in its 50th year, but it was reimagined 5 years ago. So is Ginger was reimagined, and so is TajSATS. So if we add 5 or 6 of these key new businesses, we expect them to grow to almost 15 to 20% of the total revenue in the next 3 years or so. So, and that is kind of a very conservative, realistic estimate. Ginger itself would be around 600 crores next year. TajSATS should do 1,000 crore revenue. And Qmin is all set to cross 100 crore in GMV this year itself. Amma should start getting close to 50 plus. So all these businesses, and Chambers is also around 100 crores in fees. It's not the consumption that we talk about. This is membership enrollment and the annual fee that is paid by the members. And these businesses have a very strong flow through. They have very high EBITDA margins. And we remain very confident that especially brands like Ginger have a very big future in a heterogeneous landscape like India. So a Ginger could be in every district capital, every state capital, every commercial capital. And that is like affordable, lean luxury for everyone. I mean, the target market is around 300 to 500 million people on the domestic front. So I think these businesses will grow in perpetuity. And they may evolve in different form. When we started Qmin, it was only home delivery. Today, Qmin is the all-day dining concept of every Ginger hotel. So it is home delivery plus X, plus the all-day dining restaurant. So I think, and they, match very well together. Both are somehow related to Roots, and Ginger sits in the company called Roots Corporation. So I think all in all, very interesting combination of brands, very interesting future, and very strong growth prospects.
All right. So that was Puneet Chhatwal in conversation with Nikunj regarding not only the results this quarter, but also the roadmap for the company. The stock gaining 2.5% after a good result.